Have you ever looked at a financial chart and just seen a chaotic, jagged mess of red and green lines? Well, if that's you, you are in exactly the right place. Today, we're going to learn how to decode that secret language. Welcome to our beginner's guide to candlestick patterns.
You know, at first glance, a stock chart can honestly look like pure random noise. But what if it's not? What if there's a story hidden in all that chaos? A story about buyers and sellers, about fear and greed, a whole narrative told through these simple little shapes.
So, when it comes to trying to understand the market, there are really two main camps. First, you've got fundamental analysis. Think of this like being a detective, digging into a company's balance sheets and financial health. But we're going down the other path today, technical analysis. This is all about being a pattern spotter, believing that everything you need to know is already baked right into the price action on the chart.
So, here's our roadmap. We'll start with the absolute basics. What even is a candle? Then we'll learn how to read one, see the stories they tell on their own, and what happens when they team up. And finally, we'll tackle that million-dollar question. Does any of this stuff actually work? All right, first things first. What in the world are these patterns? Well, at their core, they are the language of price action. And they're not new. They were actually invented by Japanese rice traders way back in the 1700s. They're just these simple visual building blocks that let us see what the market is feeling in a single glance. So, before we can start reading the market stories, we have to learn its alphabet. And that means breaking down the anatomy of just one single candle. Seriously, if you can master this part, everything else we talk about is going to click right into place.
Every candle starts with what we call the body. That's the thick, blocky part. It's the main event, and it tells you two simple things: where the price opened and where it closed for that period. But of course, that's only part of the story.
Because then you've got the wicks. These are the thin lines you see sticking out from the top and bottom. They show you the full journey the price took, the absolute highest high and the lowest low it hit during that session. So now we have the shape, but what about the direction? Well, that's where the color comes in. This is your instant gut check. Is it green? That means the buyers were in control and the price closed higher than it opened. Is it red? That means the sellers won that round and the price closed lower. It's a really simple, powerful visual for who's winning the fight.
So, when you put it all together, you've got the body, the wicks, and the color. You don't just get 4 boring data points. Nope. You get a complete visual story of the battle between buyers and sellers over a single period of time.
Okay, so we know the alphabet now. Let's start learning some actual words. It's kind of wild how much of a story a single candle can tell you about what the market is thinking.
First up, meet the doji. Take a look at its shape. The body is just a tiny